A very good morning, good afternoon. Welcome to our trading session here for the European Open. Hope everybody's well. Osho, good to see you. Ram, very good morning. S, Stephen, TM. Hope everybody's doing well. We're going to go through this coordinated attempt at intervention in the yen, and we're going to look at potential opportunities that we can see there, as well as having a look at gold and any ways we can get into this. Okay, folks, just as we get going with the session, remember, before we start in the markets, the purpose of this session. Hey, Stephen, there's 5 core elements to good trading, and they all have to come together. First, trading psychology. You always need to ask yourself, should I even be trading right now? Sometimes after a big win or a loss, your psychology can be not quite right. Second, you need to know the macro fundamental bias. Why is the market moving the way it is? And what's driving that? Thirdly, understand the current sentiment. Is it for a day trade or a swing trade? And recognizing sometimes, good morning, Sue, when there is no clear bias. Fourthly, the technical execution. Keep the entry simple and repeatable. You want to have as minimum risk as possible. And fifth, risk management. It's no point having a high win rate if your risk management is not carefully sorted out. You need to know your downside before you enter and your general position sizing so you have a strategy. Now, what we're focusing on these daily macro sessions is elements 2 and 3, helping to understand the directional bias on the macro fundamentals and what the current sentiment is. Whether that's FX, indices, S&P, metals or crypto, it's the same principle. Now, if you're brand new, strongly recommend, right, you go to the macro fundamental course and particularly go through the risk events trading strategy and work your way through the course. Now, in terms of daily preparation, there's a few resources we use every day: the economic calendars, the interest rate tracker, which helps us know the implied volatility and not implied volatility, the implied expectations for upcoming interest rate moves for the central banks. That often can give us a great tradable opportunity. Then we look at the implied volatility tracker. This just shows us what the standard deviations levels are based on the options market. Good turning points for us to look at. We'll have a look at the dollar yen implied volatility level. We've got a significant number of standard deviations that we'll be looking at as we go through the session. And we've also got the rankings here, which ranks the most volatile pairs, and it's not surprising the dollar yen, most volatile pair today, and that's impacting the yen strength and the dollar weakness, and that's to both sides of the equation for today. They're the cool tools that we're going to be referencing regularly. Now, remember as well the core principles that you always want to be asking yourself these questions, right? And whenever you're analyzing a currency, central bank, whatever it is, always know what's expected, what's a surprise, and does it change the bigger picture? Just by looking at that structure, it'll help you all the time, right? So you'll know that when a surprise comes, and then as you get better and better, you'll know whether that changes the bigger picture. And every now and then you get a surprise that comes that does change the bigger picture, and that's when you get your sort of swing trades. If you just get a baseline surprise, that's your day trades. Basically, when it changes the bigger picture, that's your swing trades. Okay. So that's what to look at. Now, today, we start by looking, as always, at the news feed. Right, so just go along to the news feed, resources section, and make sure you turn on the audio squawk. So that's all on, and you can hear any breaking news. And what you're looking for here, right, whenever you start the session, is find out what's driving the session. So first of all, you want to look at the daily European opening news here. And you'll see the major points up there, right? And then for the FX, you want to look at the FX section. Now, the 3 things that are really gripping markets this morning is the intervention concerns from both the Fed and Japan. So there's genuine expectations now that we're going to see some intervention coming from the US and Japan in order to stop the yen weakening. Now, the reason you might think, well, why is the US getting involved in this? Well, if you look at that big surge in Japanese bonds that we had last week, um, that big surge in Japanese bonds overflowed to US treasuries. So there is an incentive now for the US to stop the yen getting weaker because it is certainly hurting the global markets and it's hurting the US market. So that's why it's become much more urgent to intervene. And if you look at the headlines here, you can go down to the FX section and you can see Japanese currency double intervention risk after Japan's PM Takichi warned that the government is ready to take action against speculative moves amid a weakened currency and surge in bond yields. This is the extra element. While it was reported on Friday that the New York Fed had conducted rate checks on dollar yen, that's seen as a pre-interventionist move. So in other words, all of a sudden, markets are suddenly dealing with the fact that not only is Japan going to be potentially intervening, but potentially the Fed is intervening, and they've got good reasons to do so. So that trade outlook that we've had, right, is just, that's a nice confirmation. So one of the ways of expressing this, there's two trades, right? So the trade that we've been talking about is buying a put option, right? We're talking about that when the dollar yen was up here, sort of 2, 3 months out, or buying an index long yen, short the dollar, right? So either of those two options should be playing out quite nicely now for you, and it looks like that market's going to carry on. Now, if you haven't got either of those, I bought an index of short dollar, long yen, so that's working out very nicely. Now, I'm holding that. Now, looking at this, intraday, you can have a tiny stop here of just like 5 points. So 38 at this level at the 38 region. So you can have a 4 point stop here at 38, 154, 38. So if we move back up to there, try up to 3 times. Yeah, yeah. Nice, Stephen. That's the right sort of area to be in. Now, so that's first trade opportunity there is the 3.9. Um, and then looking for sort of price action pullbacks, bear flag patterns, things like that. That's my sort of go-to short entry at the 3.8. Try up to 3 times, right? Just 4 5 point stops. Now, the other major headline is going for gold. Gold climbing to a fresh record high. Okay, there's a weaker dollar. We're seeing a bid into bonds. So real yields are falling, dollars falling, and that's just turbocharging for gold. When you look at this chart here, right, and obviously that intervention is impacting US treasuries as well, right? And that's part of the reason, the incentive for the Fed to do it. You see, strongest currency of the session, yen, weakest currencies, the dollar and the euro. Now, if you look at this chart here, what you see here is the dollar and real yields. Now, when you have the dollar and real yields moving lower, see here, it turbocharges gold. So we've got the dollar moving lower, real yields moving lower, and that turbocharges gold. So second trade opportunity of the day, that's gold long. So what you want to look for is intraday opportunities to go long gold. Now, if you remember yet last Friday, we talked about three entries, one here, one down there, and then we looked at this breakout here. We said $4 5, right, stop on the breakout of that sort of funny looking nearly flag pattern. So that is now, 18 to 1 risk reward to the upside. Very nice trade. You can move that to 50%. Okay, you can take 50% profit on it and then leave it to break even. if you wanted to get back in it, it's possible to re-enter at that level as well. So there was a buy region from there. Looking at the implied volatility levels, let's just see what options traders are looking at. 4904. Oh, excellent, Ram. Well done. So Ram took the breakout on Friday. He got 3R. Yeah, very nice. Just to remember with that, what you can do is you can have four $5 stops on it, Ram. So there's totally legitimate to like have a tight, you probably had something like that, right? That's fine, but you can also be a bit nimbler. And if you're there at the charts, right? Okay, I get stopped out, go again. And you can see that potentially could be as much as 20, 2021 risk. Now, just a little tip, right? But bottom line, Ram, gold star for you. That's a great trade, right? So well done. Yeah, so at 4904, that's the volatility level 4904. So if you did get right, so this will be another potential entry just around that. Yeah, just here. So you could try if you got stopped out at that level there. So they're the two levels that I'd be looking at. Okay. The 4904 here and this level at the 4959, just $4 stop on each, $5 stop on each. Okay. And remember, the environment is beautiful for gold because you've got this real yields. Now, let me just share this chart. You can have a play around with it. Make sure you got this chart. Now, it hasn't been working perfectly recently the other way. So if the dollar's rising, you see here, dollar's rising, real yields, gold should be moving lower, but it didn't because of all the central bank buying. But normally you'll have an inverse reaction between real yields and the dollar. And I'm using an iShares TIPS ETF bond as a proxy for real yields. And you want to have that scale inverted for TIPS. But anyway, I've shared the chart with you, folks. In other words, just gold buying is great. So looking for opportunities, buying gold, buy silver, um, anything, pullbacks, flag patterns, you know, you got another little flag pattern here. This is a great way to get into trending markets. Too late really to get into it. I think if you wanted to get into silver, now it'd be a long retracement there. And have a very, about $4 stop on that. Looking through the rest of the calendar, the news. So stocks have been a bit weighed on Trump's latest tariff threat against Canada. He says he's going to pay 100% tariffs if it makes a deal with China. So just watch out for that impacting risk. Otherwise, it's the dollar weakness. So there's one trade that I've closed out, which is the dollar Swiss franc long. Now, I'm still expecting the dollar Swiss franc to pick up, right? Maybe at the Fed meeting, but I'm out of that trade now. And the key trigger for me going out was a technical trigger, right? Because I still think the dollar Swiss franc can rise from here, but I'm not, you're not stupid. Look, that's technically definitely dollar bearish. We've broken under that level, you see? So a break and a close under that level, exited. So I was able to exit from, yeah, so I know I think they've been talking about negative inflation for the Swiss franc. I'll have to look up, but my understanding is that there'll be talk now of negative rates for the Swiss franc. And remember, the Swiss hate a strong Swiss franc, and inflation is within the 2% target. So I think I think that you're going to start to get talk of intervention from SMB if it just keeps going lower and lower. We're certainly going to get talk of negative interest rates. let me just show you the inflation data for.
Just in the US tech space, quantum computing firm Ionic has struck a deal to purchase Skywater Technologies, that's IONQ, to buy SKYT for some $1.8 billion.
And this hurts their core inflation rate year on year. So their inflation rate year on year, 0.1%, 0.5% for the core reading. And the inflation rate year on year, 0.1%. Right, they're hitting that target for sure. And a strong Swiss franc makes exports more expensive. So I think this is problems for the Swiss National Bank. But like for now, we're not standing in front of a steamroller, and the dollar weakness is just across the board, and this risk of intervention increases the expectations. So near term, no, there's no more dollar Swiss franc long upside for me. And it's clearly heading lower, but it's going to be harder to go lower from here. If you look at the interest rate expectations for Swiss, you can see they're at 0%, right? And can that go lower? There's 27% chance of an interest rate cut into negative interest rates. Now, the Fed are meeting this week on Wednesday, so we could see some of that dollar weakness reverse and dollar Swiss franc upside, but that's like we'll wait till Wednesday for that. For now, just stepping aside, clearly it's a dollar bear story today, and we're just not going to mess with that. The earnings this week got big Apple, Microsoft, Meta coming Wednesday and Thursday. Got United Health Group before the open on Tuesday, which is just worth looking at with some decent seasonals, 73.33% winning trade percentage, right? Average return 5.80%. So worth having a look at United Health in terms of if we get any nice technical reasons for upside out of the earnings. So I'm just going to keep an eye on United Health, and you can see they're trying to break out of this trend on the weekly chart, and we've seen some decent upside on the daily chart. So a clear kind of, is that three white soldiers move, taking out a trend. So looking for a potential daily signal on the United Health Group after the earnings that we get tomorrow. In terms of the data, very light on data. We've had IFO business data out for Germany, slightly weaker than markets were expecting. So I'm sticking with the major stories today, which is dollar yen and gold. So for the dollar yen, we're looking for that very clear entry here, $4-5 stop. And for gold, we're looking at those two entries there, right? Return to there or down to the standard deviation. They're my intraday focuses. We've got the Fed meeting this week. And then looking at the ES markets, it'll depend on how that story goes between Canada, Trump, and tariffs, with Canada looking at trying to do a deal with China. And also the interventionist rhetoric will also be pushing the dollar a lot today. So in terms of expectations, if there is any intervention, then dollar yen can go further. So I'm holding my core long yen, short dollar positions on that basis. All right, folks, that is all for now. Quite straightforward sentiment and intraday opportunities. Nothing swing trading until we get past the Fed meeting and the major earnings release midweek. Take care, folks, and I will see you later.